Hey guys, welcome back. My name is Nicholas Coriano here to answer a question that came through a comment on my YouTube channel. Danny Alexander said, "Is it good to invest in a reverse merger?" So this is a complex question. I usually answer the questions in a comment or reply right back, but when it's a little complex, I put together a video, so that's what I'm here to do. Is it good to invest in a reverse merger? So first, let's discuss what a reverse merger is. And I got the official definition here just to make sure we get everything right. A reverse merger is when a private company becomes a public company by purchasing control of the public company. The shareholders of the private company usually receive large amounts of ownership in the public company and control of its board of directors. So a lot of companies go public through a reverse merger. Happens all the time. Berkshire Hathaway, Warren Buffett's company, was one of the most notable, famous companies to go public through a reverse merger. It's easier to go public through a reverse merger just because there's not a lot of forms to file as opposed to an IPO, an initial public offering. It's less intensive, less scrutinizing. But back to the question, is it good to invest in a reverse merger? So this is a loaded question. So the real question you want to ask yourself is the company that's purchasing the public company a good company? An investment, stock investments are just like every other investment. I think a lot of people get lost in the sauce when it comes to stock investing. They look at the price of the stock, which doesn't really matter. What really matters is how much the company is actually worth and then how much the company makes. And this can be determined by the stock price, but most people just look at the stock price and they think up or down. If they buy it low, it's a good value. A real good value is when you're buying a company that's worth more than what it's trading at currently. So to answer the question specifically, is it good to invest in reverse merger? No, that's the blanket answer would be no. A more specific answer would be you want to see what's reverse merging into the public company. So, if you have Tesla and Elon Musk as a CEO and they buy out a public company and they reverse merge Tesla, Tesla's now public, but they went public, then yeah, maybe it may be a good investment, right? If you have a very profitable company taking over a public company, yeah, it could be a good investment. If you have a dud taking over a public company, so a company that has no revenues but just happen to have the money to buy out the public company and reverse merges into the public company, then no, it's not a good investment, right? So you really want to look at the underlying private company, which is kind of hard to do because before they went public, there's no information. But generally what happens is these reverse mergers happen when the one company is a shell company or it has very limited operations or it's about to go defunct and about to go away, and another company sees it as an opportunity to just grab liquidity in their private company. So they buy the public company, they reverse merge into the public company, and now they have a liquid stock, hopefully, that they can use as currency to either raise more capital or cash out their current investors. So the blanket answer is no, not necessarily. But once they do reverse merge, you'll start seeing public information about the private company that is now public, in which case you can determine to yourself whether it's a public company, whether the new public company, which used to be private, is a good investment. Some people just hound shells. I've seen investors that literally just focus on looking for shell companies that are trading publicly at pennies or dollars and waiting for a reverse merger to happen. Usually after a reverse merger, there's a lot of press, a lot of investor relations activity. Sometimes there's a capital raise, but sometimes just the press releases announcing a new board of directors and a new game plan and a new company in the old public company is enough to bump up that stock. Is it a good strategy? It's a strategy, right? It's a strategy. But generally, reverse mergers, you should think of them the same way as you think about investing in any company. What are the sound financials? What are the revenues? What are the growth prospects? What's the management team like? Do they have what it takes to take that business to the next level and then invest in that company? So I hope this answers your question, Danny Alexander. Thanks for putting a comment under there. If you guys have any other questions, put them under my YouTube channel's videos. I'll make sure to either comment back or make another video that answers that. For those who don't know who I am, my name is Nick Coriano. Business plan writer, business consultant, graduated business school, law school, worked on Wall Street, have a real estate portfolio, have about 20 online websites, and I'm an entrepreneur. So if I can help you guys grow your business in any way, that's my mission in life. My mission is to make 1 billion millionaires, and hopefully I can help you guys get there. Hope you get your bread up a little bit more. and get financial freedom behind you. Really, that's my goal, is to teach everybody about financial freedom and how to live a life where you're not always scrounging for the next dollar, and you got something put away to pay off all those bills, and you got more coming in to pay off any new bills you want to acquire. I hope you guys are great. Hope you guys are fantastic. Have a great day. Hope it answered the questions. Any other questions, just put them in the comment section below. Again, I'll get to them. Thanks, guys.